Alright, I'm back. Let's go. I can't wait for it. I've got acquired savant syndrome. I see things weird. I hit my head. I can't help it. It's just the way it is. Um, it's the old that were dealt to me after I got my wreck. So, um, now I stream and post things that I see. Um, I'm looking at the
Navy
market
Federal
today.
More Rewards American
I've been cut
Express
off
card
by my internet
transforms your everyday
twice already.
missions, so you can turn
So
your
thanks
commute
to
fun
that. I did
into
have some
tickets for an
people in
awesome
chat.
night out,
Let me
and turn your grocery
reopen
run
this back up.
into a trip to
Close the
total
other one.
relaxation. Get 3 times the points on supermarkets, restaurants, and on gas and transit. Navy Federal Credit Union. Our members are the mission. Over to the Armed Forces, the DoD, veterans, and their families, insured by NCUA.
Okay,
American
I'm
Express
back.
is registered service
Not
mark
again.
American Express, used by Navy Federal under license.
So I believe that's me. I'm the one viewer. I just posted my Activision thing, so that's out there. And let's take a look at RRR. Where's that? Close that. Let's take a look at this in R15.
Did you see her?
No, I would never lie to you.
Freeform's Cruel Summer, now streaming on Hulu.
Let's take a look at this on a 15. I wish Moon was here so I can ask her about my logo. She likes it. I think it's pretty hot. Alright, so I guess I need a Discord. I don't know. These are all things that'll work out at some point. But let's see. RRR. I can. I have. I looked at it earlier. Let me pull it up. So it doesn't say that I have any viewers. Sorry, it wasn't really. I appreciate you actually saying something. So Apple had a little bit of a downturn today, and it struggles. The market makers love to take control of Apple and just run it down, and prevent it from making moves. It's been trying to get back up to the 135 area for. I mean, it was actually trying to get back to the 120 area for about a month when it took a big turn about 2 months ago. It took it about a month to get back up there, and it's a mover. It just gets held down. So the news with Apple is, I mean, it's, there's this car. It keeps rumoring about a car coming out. Let me see if I actually still have it up. I might have closed it. About the Apple car. It's the same car that they keep showing. It's nothing crazy. But so here's the news here. This was from April 13th. And there was new news coming out yesterday, but I think it was just a recap of this. It's being developed for 2024 later. Self-driving vehicle, compete against Tesla. You got Neo, you have Tesla's new lineup coming out, you have XPOV, it's got their XPEV, they got their vehicles coming out as well. There's probably like 5 to 6 EV car makers coming out. Hold on. Thank you, I appreciate that. My internet is doo-doo. But let me see if I can... what happened to my... I think somebody touched my video there. Am I back? Am I still frozen? Looks like it's frozen. We'll see if it catches up. Alright. We're a couple seconds behind, but it's catching up. So sorry about that. Let me get this screen up. Boom. All right, here we go. So Apple Car, this was the April 13th news that came out, saying in 2024 they're coming out with, or planning on releasing the Apple Car, all electric vehicle. It's supposed to compete against Tesla and other EVs. And maybe even offering it to Hyundai and BMW. And Hyundai's been really active on the robotics scene and on the quantum computing. So they've been buying up companies left and right. So there's a lot of action going on with them. I'm sorry. I can restart it. My audio is good. Okay, that's good. I mean, nobody cares about seeing me. As long as you can hear me, you're good. And if you can see my screen, that's good. Okay, perfect. Thank you for the feedback. I can turn that down actually. Normally it's so low. There you go. Turn it down. How's that? Is everything good now? I'm much appreciated for all the comments. I mean, really much appreciated because I rarely get anybody that tells me anything. So that's good. All right. So they call it Project Titan. That's interesting. Perfect. All right. So car launch expected 2024 to 2028. Huge spread there. And yeah, anytime. Much appreciated. Please like, and if you want, subscribe. And if you have other tickers that you want to look at, I'll look at them as well. But so they the Apple Car that they're talking about is the same one that they've been toying around with. Let me see if I can find a picture of it. Of course, they're not going to show the Apple Car. They've got this guy here. I hope that's not the car they're coming out with. It's not. All right. Well, there's a long article here. What I'm going to do is I'm going to post this for you here in the chat. Let me find it. Where is my chat? There it is. All right. Gotcha. So Hyundai, which is I like Hyundai and I don't like Hyundai. Hyundai is a very forward-moving company, and they're doing a lot of things. They got their fingers in everything, and so they actually have EV cars coming out as well. And there's smaller companies that they bought up that they own that are coming out with that are producing EV cars. But they've also got their fingers in robotics and quantum computing, and so there are some companies that they own. Let me see if I can find my list. There. Let's see. What is the company that Hyundai owns? Thank you. I appreciate that. If I can get more people like you in stream, man, I'd be happy. I mean, I'm happy now just to have somebody to talk to. That's great. Much appreciated. Thank you. I'm gonna probably have to come back to you on that company because it's avoiding my memory right now. And I might actually have a playlist for it. Let's see if I can find it. Index 1 pennies, quantum computing. It might be in the quantum computing one, biggest cheap crypto, DARPA, energy ETF, and waiting volume, upcoming, absorption, semiconductors, robotics. Let's see what's in this robotics one. Not that one. One more. Let me check quantum computing. Not that one. This one. There. DMYI. DMYI is the company that is owned by Hyundai, and they were bought out by another company I can't think of. But anyways, they've got quantum computing, and so a lot of their research and everything that they're coming out with is based off the quantum computing information that they're getting from that. And so the only reason I say I don't like Hyundai is because you can't play option calls on Hyundai. And so that for me is like a stock killer for me. Like I don't want to play it. You know, if I can't play option calls on it, then I don't care. Like, what's the point? And my internet keeps dropping this thing. There I am, kind of. So as far as Apple goes, I can chart this out for you and show you what their path is. I look for divergence on a lot of things. I don't know if there's going to be divergence on this. I haven't really looked at it that much, but I like to look at a day chart before I look at anything. And let's see. Oops, I just ruined it. I'm going to get rid of all of this. So I live in Snow Hill, which is a really small area, and it's near Greenville, North Carolina, and I believe it's DSL through AT&T, and so the cap on it's 25 megs. So let's see. Let me clear out my drawings. All right. Let's go back to a day on this. All right, so on this chart, what I'm going to look for is I got my MACD and my stochastic RSI. I'm going to look for divergence to see if I see anything in the recent right now. And I mean, it's pointing up at an angle, so I'm not really seeing much there, but let's toy around with this angle here from that low to there and see if there's anything different. First thing I'd like to do is drop a trend line on this to this to kind of see where this the oscillator is hitting in the exact same areas, and they're kind of representing the exact same points. Yeah, no, it's not. And there's not anything, as far as like internet goes in my area, there's not anything that's relatively better. So I just something I have to deal with until I can get a better situation. I don't know how much you know about my story, but I have acquired savant syndrome, flipped my world upside down. I've been suffering with it for the last 6 years, but I basically acquired a talent after a traumatic brain injury, which has me the ability to see things different than what other people see. So it's kind of like a double-edged sword. Yeah, it sounds cool. I'm able to paint near realism on a large scale, where I couldn't draw or paint before. But you know, I also see things in the market different from what other people see. But on the same note, it's ruined my life, and I'm not financially, it's ruined me. So so I'm not really seeing any kind of divergence on this right here per se. So, but I do like how this is dipping down into this low area right here on the MACD. So I'm probably looking for a cross to come back out of that, across the green to the red here. And same thing on this. I'm just looking for it to dip down and do a cross from the green to the red there. And yeah, there is a cable internet. It's doo doo. From what I'm told. Um, I'll find a better connection at some point. We'll just all have to suffer a little bit with me until I do. Mainly, once I get my options plays up to where I'm making enough money, I'm starting off with a really small account, and once I get them up to a point where I can actually play real stocks on option plays, and I'll actually start to be able to provide money for myself and actually do my own thing and move to an area that has better internet and stuff. So that's the path. Um, oh yeah, yeah. It's let- I gloss it over. It is the absolute darkest 6 years of my life. Very optimistic person, and I've had my fair share of humble pie. Let's just say I'm stuffed. I am stuffed on humble pie. So stuffed on humble pie. I'd like to eat something different now. That said, everything happens for a reason, right? I just don't understand what and why yet. But so I'm just kind of recreating my own path. Yeah, that costs money, and I'm with you. I might actually look into doing something like that when I'm able to actually make enough money to provide a living for myself. I've literally just started doing this, and it's productive. But when you start with a very small amount, you only make a very small amount. Yeah, stuffed, full to the. You know, I'm gagging on humble pie right now. Um, So yeah, it takes time whenever you are doing option calls with a very small amount of money to compound it over and over again. And I got up to about 800, and I got into another set of option calls, and I'm just waiting for them to come to fruition, which should happen here in the next 10 days. And then I should be close to 1,000, and then I'll reinvest that again, and I should probably be up to about 1,500 to 2,000 by the end of that. So it'd be another month, and that's still not enough money. I mean, I just got to keep doing that until I get to a point where it's up there. But I'm on the right path. I'm making good calls. I'm making good moves here. Um, so back to it takes money to roll and roll into more. Yep, it does. It does. And I'm patient. I know my name's I can't wait for it, but enough to have patience. So it's you know I uh, I just sit and wait. I try to make good moves and just sit and wait. Um, so I like to go by wait now, even though my name's I can't wait for it. And the thing that I'm relating to is I can't wait for the day where I'm actually back to normal, out of this hole that I'm in. And so that's the I can't wait for. And so that's what we're doing now. So we're building those steps. Um, all right. So on Apple, let's throw up another trend. I have a couple of different things that I like to use to help me see, to shorten the amount of time it takes me to find where we're at in price action. And so I need the upper one, which is this, and it's showing low here. So let's do this one instead. Take that one off. And hit OK there. He added this one to be lower. Let's go one higher there. All right, so right off the bat, looks like we're patience, yeah. Yeah, it's gonna take a lot more than that to knock me out. Um, I just had to. I've lost the ability to be who I was in the past. I can't do the jobs that I used to do. My brain won't. So therefore, financially, um, I'm ruined in that aspect. It's not that I mentally can't do it. I can, but my brain won't let me. It's like if my brain was another person, it's basically holding me down. And so every time I try to go back to what I used to do, which was sell cars and manage, it literally will make me. I'll pass out. I'll fall asleep. It won't let me do it. If I don't stay, um, if I am not enthusiastically engaged in something that I'm like um, that I'm completely behind, to the point where it keeps my brain moving, I'll pass out. And so, a good explanation of this is sometimes my kids like to make me play games that they play that they find interesting that I find boring. And so, as I'm playing them, if I'm not into them and I can't find a way to get into them, I'll start to yawn. And so, when my yawning becomes, 2 to 3 yawns per minute, it becomes perpetual. And at that point, I'm yawning like every 10 seconds after that. And then at that point, I'm like on the verge of passing out. And yeah, so I had to reinvent myself at age 38. It took me a couple years to get to that point, but at age 38, I had to start over. And so, um, doing what I used to do, I don't believe in the car business and those people and how they treat people. Um, it's against my, I guess, my morals and how I am built now as a person. Um, the things that move me, my passions, I have to be passionate about something. That's what it is. And so my passions now are my art, telling my story, the stock market, and helping others. And if it doesn't fall into that, I'm out. I can't do it. And I'd rather go to jail. And just, not make money and not pay my bills and not do anything because I can't. I mentally just can't do it. It won't let me. So that's why I got into trading, because I'm really passionate about it and it's something that I love to do, and I do see something that other people can't. And so that's kind of like where we're at this today. Oh yeah, I mean I was making stupid money too, but I mean I see the potential in this, and I can make more money in this and have the freedom to do the things that I like to do, like painting, helping others, do my story, stream. Um, Even though I'm like at the very bare bones part of it and everything, and it's very discouraging when I get in here and nobody's talking to me, because I kind of run out of things to talk about, and I feel like that I'm not talking about things that people are interested in, or they just can't see what I'm trying to tell them. And so I'm having, and I don't think I have a hard time explaining what I see. So I think I just need the opportunity of people to come in and actually see or listen to me explain to them what I see. And um, I don't know if you've looked at any of these on TradingView, but I'm on TradingView as I can't wait for it as well. And I think I can actually pull exactly. And I think if more people did that, the world would be a better place. And so I, I worked like a slave in the car business, and I never took the spend time with my family. I didn't care about anybody but myself, and just working in the car business. And that's no way to be. It definitely won't. It won't win you life points. This is my trading view account. I have a lot of stocks that are charted out there, and what's great about trading view is you can hit play on them after I've predicted something, and you can follow up to see whether or not they follow the trend. And it's not so. My predictions aren't on there. It's free. It doesn't cost you anything. You can literally just click that link, and it'll take you right to my stuff. Yeah, no worries, no worries. I'm here. I am here to help everybody else. Whether people see it or not, I am here to help everybody. Um, and so I want people to see what I see, and if I can bridge that gap, then great. I've done what I've wanted to do. And if I can help people become financially free, because I struggled with it for the last 6 years, even better, because that's what I want. Is I want people. My whole path is to help people avoid having to deal with any fraction of the amount of the darkness that I had to deal with for the last 6 years. Oh yeah, yeah. I used to be a douchebag. I mean, I was the worst. If you had a daughter, hide them. I was horrible. I was horrible. I hate who I used to be. Um, and if you go to my Instagram, which is also I can't wait for it. I can put it in the chat. Oh, um, if you scroll all the way down to the bottom, you can actually see who I was before my wreck, and you can see where my wreck hit because everything changes on my Instagram. But yeah, true douchebag for real. Um, I mean, I didn't care about nobody but myself, and I mean, fashion, my car, myself, making money. That was it. And working in the car business was just that was my vehicle to get there to sustain that life. And then I had my wreck, and then just everything flipped upside down on itself. And I woke up one day, and I was a different person. I literally woke up, was looking I was looking at my feet, looking out. I had floor to ceiling windows. I was one block from downtown Raleigh, and I was looking at the skyscrapers and the view. I was in a really modern apartment, and I'm looking down at my bare feet, and I'm looking out the window, and I'm like, I remember contemplating my life, like not contemplating it like, oh, um, like it's mine, like contemplating it like it's not my life. And there's some person who just reached out to me called Bright Side Brain, and she's going through the exact same thing I went through. It just happened to her about maybe a year or two ago, but she has acquired savant syndrome, but she was left side dominant, and now she's right side dominant. And that's basically what it is. It's your right side brain having to justify every decision that your left side brain made your whole life, and then feeling like your right side brain feeling like it's trapped in that life and having to deal with it. You know. Thank you. Much appreciated. Much appreciated. I couldn't draw a face to save my life before the wreck, and now I can paint, like that. So it's weird. Um, but yeah, so I'm trying not to diverge off of plotting this out for you. I'm sorry. Uh, yeah, yeah. I avoid. You don't have to have an account to look at much of my Instagram either. Um, but yeah, I try to avoid getting on those things as well. I only post Instagram because it's a good place to post my art, and it houses everything from the beginning till now. So that's why I'm on there. I don't really get on Facebook much, although I do stream to it, and pretty much everything I do is to get my story out. I had a vision, so I've started getting visions when after my wreck, which just sounds weird to say, but it's true. And I had a vision that if I told my story enough, that eventually somebody would hear it and get me on a platform that would put me in front of thousands of people, not just hundreds or 10 or 20, it like thousands of people, and I'd be able to tell my story, and kind of, help them with their issues, because everyone finds something in my story that they can relate to, whether it's trauma, anxiety, depression, whatever. 70% of the world is suffering from depression, so we're all in the same boat here, and so everybody has something that they can grab, or whether it's a religious thing that they see, or however they view it, from every aspect, somebody finds something in life. And so I find it very important to tell my story to people because it helps them, and I want to help them avoid any kind of the darkness that I had to go through, because I literally lived in the darkness. Um, yeah, like a TED talk. I would. That was my goal, was to be able to do something like that. And so my news went viral January 2nd of last year, 2020, and it hit over 60 news channels across the United States and across the world, all at the same time in a 24-hour period. But it didn't go viral enough, but it did go viral to get some people to look at it. And I had Kelly Clarkson sent me tickets to come out and video, to be on set with the guy from Pet Detective. God, I don't know why I'm drawing blank on his name. It's a comedian. Um, Jim Carrey. And because he does art now, and it's not the best art, but it's art. And we're going to talk about art and my story on set. And then, COVID hit, and everything went to shit. um, And so we had scheduling differences or difficulties. I had tickets and everything, and then we just couldn't make it work. And so they moved on. And I don't even know if they started filming again or if they're filming yet, but they just moved on. And so that's how the Hollywood works. I'm a horrible writer. I'd love to. I'd love if you have any ideas on who I can tell my story to that can put it into a story format that people would want to read, because I can tell the story in a way that people love it, but I can't write it in a way that people will love it. If that makes sense. But yeah, I would love to. I would love to have my story out there because there's a lot of stuff. I mean, there's there's romance, there's trauma, there's that deep dark hole that I went into. There's a lot of visions that I had that came to fruition. That I mean, there's building that's 50 foot by 50 foot. I've never spray painted in my life, but I had a vision that said that I could. And so I followed that vision. I spray painted a mural on the side of the building, and I nailed it. Um, yeah, I mean, I'd love to work with a writer. I don't know any though. I wouldn't even know how to go about doing that. And if it involves money to start off, then I don't have that either. I'm still trying to dig out of my hole. But yeah, I could. I could. We can use these videos that I'm doing right now. I thought about doing a section where every day I came out and I told part of my story. But I don't know how to differentiate that for my stocks and didn't want to bore people with it. They weren't interested in it. But maybe it's something that I should do. I'll open up a separate channel for it. Yeah. Maybe I'll do that. It's a good idea. I'll open up a separate channel, or I'll just go about my acquired savant syndrome and just talk about it. Um, but yeah, thank you. I appreciate that. But yeah, my goal was to get on and do like a TED talk and help people. And so there was a group in California that took interest after that. I hit another low after Kelly Clarkson canceled on me, and went into another little hole. I kind of crawled out of that, and there's a group out of California that reached out and said that they were interested in doing something, but then COVID was like full blown, and then they couldn't fly people out because the way it worked was that I would have to fly to California, go into quarantine for 2 weeks, come out, film, when I got done filming, go back into quarantine for 2 weeks, then fly back home. So that that doesn't really work. So I had to wait for the whole COVID thing to go over and to see if these people were still interested in doing something. But they were going to have me doing something with a nonprofit, um, helping people and telling my story, and then also streaming in between. And so maybe that will still come to fruition. Who knows? But I'm not allowed to talk about it any more than that. Um, but that's so maybe I don't know. We'll see. But definitely, yeah, I'll probably do something about telling my story and maybe streaming it and see if it can get some traction. The only thing is just it's really not motivating when I do stuff like that and nobody watches the videos. And that's just all on like hits and like ratings and maybe whatever. So um, it definitely makes me not want to continue doing it, but I have to just get past that and just keep doing it, I guess. Um, but yeah, definitely, COVID definitely um, put a damper in some things. So the way I'm seeing um, this, and if you have any more questions, I'm open book about what happened to me and everything like that. So feel free to ask um, whatever you want. I'll talk all day. Um, so all I do is I find the lows and the highs, and I draw trend lines to connect them based on where I think the market is, or repeating itself, or going to repeat itself. And so it's nothing groundbreaking, but it's just part of the process. Perfect. I'll do that. I much appreciated. Um, yeah, I thought that I've got a guy named Savvy Sean who um, leaks me good information about things, and so I can use that to kind of come up with better stream things, names. There. All right, so what I do is I find where I think that the market's going to repeat itself. I draw trend lines for it, and so then I try to match them up to the present day area to see where exactly it's really lining up. Yeah, absolutely. There's a lot of things I see. There's stuff that I haven't covered yet. I need to do videos about the curve. That's my baby. Um, howdy, Michael. How's Michael? Um, let's see. But yeah, there's things that I see. Um, I saw since my third month trading, and uh, I haven't really shared with other people yet. And so I'll probably make a set of videos where I cover different parts of that. But there's a whole rule set that I came up with because I didn't look at other people's stuff and learn how to do the market. I made my own rules based on what the market was telling me. And and so that's how I've learned how to look at the internet or the market, and then I found Wyckoff trading, and that was the logical approach to everything I saw in the market visually, and so I looked at that 2 months ago, and I've basically acquired that and added it to my um, the way I look at it, and so now I have a visual and logical way of looking at the market. Um, oh, hey Michael, welcome to the chat. Yeah, yeah. I charted it back when it was over there, and I saw it was going to go down, and Apple that is, and so I I wait for it to go. I waited for it to go down and try to get ride it back up, and I got it up to about 130 and got out. But it wasn't my play. It was somebody else's play. I was helping somebody on a different in a group that I was in, and so I helped them avoid losing money on it. But that was my play on it. So that's how I got involved with Apple. Was I made a simple. I actually have a video on here on my YouTube channel. If you guys look at it, it's called Simple Option. Um, a simple option play on like how to do options the easy way, and it's finding divergence. No, yeah, I don't know. Apple gets so the market makers run run Apple down pretty hard, and that's why I stopped playing it because the market makers like to run Apple down and prevent it from running like it should, and so that's let's see. I'll finish doing this chart, and maybe that'll help you find where it's going. But so this trend line here is basically this trend line here, showing you, and it's basically showing you where this drop right here is stopping. Um, and so that's a good starting point there. So now this one is supposed to be the gap after. So that would be. This is the gap after. So that's supposed to be this here. And then this would be touching the bottom of that trend line right there, basically. So now if I did and adjust this to there for these lows, if we did that, and then did this, and then did this. And so I do this because the market always repeats itself. And here's how I look at it. Um, and this is like not like profound like equations or anything like that, but the price action that you see in here is profound equations that are going on. And so by copying the trend and moving it over, I'm predicting where the market is going to go. I'm basically enveloping it, saying that it's going to go to this area. And so what I do is I wait for price action to actually go to this area before I make a move on it. Um, and so then when I actually see it reacting to this trend, then it actually makes it. I definitely look into Twitter for you. I'll check that out next. But whenever it is reacting to this line and it shows that it's actually going to start turning around, that's when I start looking at a stock to get in. When it starts to respect the trend line that I put down, because that's saying to me, okay, hey, this market is actually going to start following what it did in the past at this point. And so now is a good time for me to get in. And so that's why I do these trend line like this, because it's the easiest way to give you a starting point or a way to say, okay, this is not working out the way that it should, and kind of pump the brakes and say, hey, let me take a step back and wait for this to actually start acting like it should, and then make a move on it from there. And so if I take this from the last previous high and move it to here like this one is, and then move this one to there, now you have a predicted channel of how this price action should react going forward. And so I can even get more aggressive on these trend lines to give it more detail going forward on like how it should really respond. So this is that. I can't. Oh, I have to do it from. Hold on. I need to move this down. There. So, and then what I do is I change these to a different color to show that this is an alternate, like a tighter route, that it could hold to this, but it's more likely going to hold to the green one and break through this. But you can probably see it reacting to this line as well. So as an alternate path on this, I'm sorry to read all this. Perhaps due to lawsuits, probably, yeah. Sold stop limit today, but hopefully it's a new low. Love to learn more about options. Oh, hey, what of go look at my simple option strategy. It's in my video section. 3 videos tied around it, and it's going to actually tell you how to play, how to look for divergence, what stocks to play, and which ones to look for them on, and stay out of them until you find the play on one of these 3 stocks, because those are going to be like your winners. Like those are going to be like, if you find divergence on these, it's almost like a guaranteed win. And so that's what I would do. If you want to get into options, start off there and then ask me questions on what you see, and I'll be glad to help you with the rest of that. So now, as far as Twitter, I'll look at that next. To buy back at Apple as soon as it hits the bottom. Yep. All right. So I'm showing that the bottom can be as low as 124.40 on this, but I can get a little bit more aggressive on this move right here and see how high it could go. So you can go something like this. So if I was to grab that, it could look like this is going to tie into this area here, probably like that. Such a random high. I don't see it coming down that far. I want to see this. lower than that area right there. There's a gap right here. That could be what that is right there. And this would be, I'm gonna get rid of that one. It doesn't make sense at all. So based on what I see here, your low could be 125.78. You might find resistance right there and start reacting to this yellow line going up, and then come back and hit this green line right here at 128.69. As it starts to stair step its way up if it finds its bottom. And all it's doing right now is, if I was to break down this chart without all these lines on here, is I would take a look at this. This box right here is your consolidation range, right? Once you hit a new low, you hit in consolidation, and that's to shake out all the weak hands so you can gather up and reaccumulate to go back up. So this is the distribution area up here, and so they distributed all their shares coming down to drive it into a lower price point. Down here is where they start to reaccumulate. This is the supply zone, which is just the previous node. Yep, 125 area sounds pretty solid. And if you look right here, this right here, let me see if we can draw. You see this price action funneling down into like a point right here? That is a node. And so a node is where they come down to get better price point. And price action is always going to come back down to tap into a node, especially if there's a blank area. So like where you see a candlestick and you see wicks, but you see the candlestick body is bare and there's no wicks in front of it, that's leaving it blank for them to come back down to tap into it. And so by fair market trade, institutional buying has to wick an area. So if they have a very bullish candle going up, like a very big green candle going up, like this right here. You see this candle is a very big green candle going up, and then it has this little turn like wick here and a wick here. Well, that is where the node is in between those two wicks. And then you see this come back down and tap this area right here. That's them tapping into this node. So they come up, they reaccumulate here, they dump off the supply here in the demand area, which drops it back down to here. They pick up more stocks here, dump it off back into this demand area right here. See it wicks into this area where this last wick is right here. That's where the node is. Retail buying drives it up past these areas. So the node is actually right there. It wicks into this area, dumps off supply again, or demand, and goes back into supply, back into this area where these nodes are. Here, where this area, this candle is right here, where this gap is right there. And so basically it jumps over this gap, it jumps over this node, so it doesn't have to interact with it, comes back down, taps into it, goes up, comes back down, taps, runs past it, taps into this previous one down here, runs back up, gaps over it again, comes back down, respects it right here, dumps off again, picks back up, runs back up, comes back down, taps into it again right here, but leaves this whole candle blank right here. Runs up, taps back into it right here, respects it basically, runs back up, comes back down. Now where's the last previous node? Probably this guy right here. See this, where this runs up, after it taps into it here, this runs up just like over here where this one ran up. Let me get an arrow. I know I'm all over the place. So right here where I said it tapped in and respected that node back here and ran back up for the first time, and then it stops here, then runs back down, runs up, breaks that high, comes back down, respects that node, that same area right there, and runs up again. Same thing here, drops down, taps into this previous node back here, runs up outside of this little consolidation box that it's created, creates this high, runs down, respects this node, runs past that area right there, runs past it, comes back down, respects this node right here, because it broke out of this box of consolidation, comes back down, finds support on what used to be resistance. That's the resistance right there. It's touching it. It's pushing up against it. Comes back down, finds support on what used to be resistance, and then bounces out and goes long. So technically, it should hold right here, and if not at 125.27 spot, in that area, it should definitely find. I mean, there's a lot more support, like you said, in that 124 range, but it should definitely find support at 125 to 125.27 range. It should find support there if it goes any lower. Oh wait, I'm on the wrong screen. I'm so sorry. I'm so sorry. Man, I'll do it again. I'm so sorry. My audio is great. I'll get used to this. I'm sorry. I feel bad. All right, let's try this again. Sorry about that. All right. So let me go back here so I can show you again. So when they drive the price down, oops. When they drive the price down, this is called distribution. And so when it hits distribution down here, it hits the low of where they want it to go. Fear of missing out happens right here in this area. Retail sees this. That's us, weak hands. When retail sees this price act, they jump in. It's called FOMO, and fear of missing out. And so then retail jumps in and drives the price down even faster. Well, then institutional buying buys up all those shares right there. So they have a big portion of the float, and the float is what's all the shares that are available out there in the market available for retail is what the float is made out of. And so when the float has a lot of shares in it, price doesn't move up. But when you soak up the float, which is what this big long candle with this wick is, yep, buy on FOMO. When they soak up the float, basically what they're doing is FOMO is jumping in, they're driving the price down, they soak up the float of all those shares being shorted, so now they own a bigger portion of the market's float and are in control of it, which means that strong hands are in control of the float, weak hands aren't. They dump off the rest of their shares that they've shorted, and then retail is dumping off still. They're still thinking it's going down as well. And then as they get down here to a lower price, so you got 3 bounces usually. 1, 2, 3, and then retail buys back up again, or institution buys back up again, soaks up the float, lets them short one more time, soaks it back up again, and then at this point right here is when the market actually lets institutional buying ride for free going up. Institutional buying doesn't have to spend any more money at this point, and they get to ride the price action up to here. So basically you get a from 112 to 126 ride for free. And so they ride that all the way back up to here, dump off their shares again, let FOMO kick in right here on this big red candle, and then they start soaking the float back up. Let it drop down again, soak the float back up, and then they ride for free. If it doesn't move up and the volume starts to spike, then they have to dump all the shares, because that means if the volume spikes while the price action is moving up, that means that they don't have control of the float enough to let it ride up anymore, that there's a lot of free shares out in the float that retail has control over or have let go of, and now the float is saturated with empty shares in weak hands. And so they have to drive the price back down again to soak the float back up in order to get it to run up again, if that makes sense. And I've kind of glazed over that. I didn't really go into a lot of detail, but I'm trying to give you enough to kind of get you to like understand like how that really happens and how it works. It's all psychological. And so they've spent hundreds of millions of dollars on figuring out how retail responds to price action. And so they use that, and it's about 16 different moves that they do in order to get retail to finally be on the same side of the fence as they are, but to shake them out of their shares in the process so that they can obtain more of the float and get it to a final point where they're like, okay, we own 98% of the float. Now, the last 2% of Apple is out there for retail to fight over. And it doesn't sound like a lot, but we're talking like probably hundreds of millions of shares still, or just millions of shares. It might be like 5 to 10 million shares left over in the float. But if you think about it, there's a lot more people trying to invest in Apple than 5 to 10 million people at one time. And especially if they get it to this point right here, because now they've got captive people invested in the stock right now that have lost money because they shook them out of their shares, and now they've got them to a point where they're all on the same side of the fence, and once they get them all on the same side of the fence, they can run them back up. So now what I was trying to show you was where we have this empty area down here where these candles, these bodies of candles, don't have wicks covering them coming down. And so fair market trading is when institutional buying comes in and they buy up this stock, it leaves these big green candles like this. Well, it doesn't, basically they're not giving the bears in the market a chance to short this stock, because if they did, it would go down. You know what I mean? They would have wicks in front of this. And because of this green move up, all these people that try to short the market right here missed out on the opportunity to play the market. And this is kind of where it's really effed up. But so in order for them to be fair for the bears in the market, what they do is they bring the price action back down. If it's a big green candle, they bring it down at least half. Yeah, yeah, sorry for that. Um, they bring the price action back down and then run it back up to at least wick it. And so if you look right here, you can see this candle being covered by this long wick right here, and that's them covering their tracks at least half of the distance of these candles right here, these green candles, covering at least half the distance of those candles, and giving the bears a chance to get back in and try to make money. But then they just run it up, and so they lose money. But that's what they have to do. So whenever you see candles like this left wide open, yes, you're going to make more money. So look, if you just ask me to look at something whenever I'm on, I'll look at it and I'll give you a point of reference where you should expect the stock to go. And when it hits that area and you start to see signs that it's turning around and going up, then you start thinking about getting in. And so what I like to do is I will only make my decisions. I make my charts based on a day chart, but I make my decision to get in on a 15-minute chart. And that's as low as I'll go. And so I wait for the 15-minute chart to show me signs that it's actually turning around before I get back in. It's about as good as it gets. If you see a trend line being respected, you see a 15-minute candle showing that it's becoming very bullish and going in the opposite direction. Those and then there's a couple of things that you look for. Like, here's a low, he doesn't come as low as this area right here. That's the safest point to get in on any trade, is right here. I call it one leg up. So if you think of it as this is one leg down, and then this leg is up slightly than this leg, that's one leg up. That's the safest place to get in on the market. That's right. And so what I like to look for is I look for trend line respect, for it to pay respect to a trend line. 2, I look for a new low, and then a slightly higher low to happen after it comes down and respects the trend line. And then, so I would have gotten in, see this low right here that's created? This is a new low compared to this last low over here, the lowest low. And so that to me says, okay, well, this is distribution. This could be the end of the distribution right here if I get one leg up. And then I see this candle over here come up and it does a one leg up. It doesn't come as low as this one here. And then the next candle after that also does a one leg up to that candle. So there's a double confirmation to this one leg up. If I would have got in right here, price action comes down, but it doesn't come down as low as this one right here. And so price action comes down right here, and then turns around after it respects the trend line right here. So a better place to have gotten in was, if I wasn't patient, I would have gotten in right over here on this one. But if I had been patient and waited for it to come back and respect this trend, hits this trend line right here, and it's still one leg up from this one right here. And so the better place to gotten in the market would have been right here, because then price comes down, or even right here, where it comes back, respects this trend line, and then does this gap up right here, and the low is right there, it's still one leg up. So either way, here, 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 doesn't matter. It's all the exact same place, if you noticed. It's the exact same price point is where all the one leg ups are. And so if I gotten in here, there, or there, it doesn't really matter. I still would have been in the exact same place. And if you look, price action 120 to all the way up to 126. So if you were playing a bounce play, you could have made a $6 run off of that, or a 30, all the way up to 130. So a $10 run off of that right there, and on that would have been huge. If you would have bought an option right in the money, which means like where the price is, or the next price point under target point under that, you would have had anywhere from a $6 to $10 run in the money, which means you would have made money on every single dollar. Would have been compounding after that, and you would have made thousands of dollars off that run. $10 run, you would have made thousands of dollars easy. On one option call, you would have made $1,000. Had you played, 4 of them and let go every time, you know, if you had 4 option calls and you let go, here's your last previous high here. After the last previous high, after it reached that, anytime you saw a red candle, if you let go of one of those option calls, boom, let go of one. Boom, let go of the second one. Boom, let go of the third one. Boom, let go of the fourth one. You wouldn't have made any different on this money here. It would have been the same really. Um, but if you actually counted for like lows and highs, so you have 3 bounces after it hits a high. A better way to have done it was, if you had 4 option calls, you got this runs up for a high here. You see this big bearish engulfing candle right here. That's a sign that it's going to start coming down. So then you let go of 1 contract there. You still have 3 left. You wait for it to create a new low and then run back up. Here, you let go of 1 here. It comes down and run back up. You let go of 1 here. So it'd have been 1, 2, 3, and you had 1 left. And it runs up like this and stops. You let go on that one there, because that's lower than that one there, and it's already struggling to get up there. So therefore, it's not going to make it. So you would have had at least 3 different opportunities to make it higher than this one right here. And you made the same on this one. Basically made the same on that one, but made more on that one. Options is the safest way to do trading, period, if you do it the right way. I highly encourage you looking at the simple option strategy that I have. I got that from a guy who's a millionaire who took a huge interest in me as I was working for this company. I was selling how to do stuff like option trading school, day trading school, and it was garbage. But I didn't know it was garbage. But I took their very elementary level course, which was just the introduction to like their course, which was absolutely nothing. But I was selling people on this. It was a $10,000 trading school that you basically a year subscription, and they did the video conferencing and everything, which I would love to have my own. Yeah, it's in my. If you subscribe to my channel, it's in my channel. But I can find it. Let me see if I can find my channel. Let me take a look. My YouTube's not loading. There it is. My channel. Copy. All right. See if I can get this back over to you. Yeah, so there's my channel there. you can watch all my videos. I've got about 12 videos that they're probably not all released. I got them scheduled out. But I can cover anything you need to learn on. I mean, whatever you want to learn, I can cover it. And if you just ask in chat, I can show you. But watch those videos because uh, if you have Thinkorswim, it'll show you step by step on how to do an option trade. And Thinkorswim's harder than most, but it shows you this very simple way on how to do an option trade, how to look for divergence, how to back test it to see whether or not the strategy worked for you, and how to get an answer right then without you having to wait for it to pan out. So you can find divergence in the past, test it, see what it would have paid if you would have played it on any given certain day. And it's a really strong strategy. But so this guy, Richard, he's a millionaire. And so he plays options for fun. He does 2 option trades a day, sometimes 3 or 4, but he basically makes $6,000 a day on his futures trades that he does. It's Thinkorswim's, you can get it for free. You just ask for a demo, you just apply online and it gives you a demo account, and you can test it for, you don't even have to invest money in it. The main thing is that you want to get the MACD and the stochastic RSI, and you're only using the day chart, so you don't even need live time in order to find an option play. You can have the delayed time that's on there, and then you can also go to TradingView and do the exact same thing. It's TradingView you need is just a place that has a MACD and a stochastic RSI. You put the that I use, which I have on the video, and you can divergence in a day chart. That is your trigger to jump in on an option and go long. But I strongly recommend that you only play RRR, which is Red Rock Resorts, which is my favorite casino, but it runs just like Home Depot. So think of it as like a bargain play on playing Home Depot. Home Depot is a very bullish running option play, and so Home Depot is more expensive though to play, and so that's why I like RRR, because I can play it cheaper until I can afford to play Home Depot. But Home Depot is like the pinnacle of option divergence plays, and so you can't do anything but make money on Home Depot if you find divergence. It is this. I can show you a stock right now. I can show you a divergence that happened a week ago or 2 weeks ago on Home Depot that I didn't have money to play, that I was like drooling over. That I wish I could have played, because if you get by divergence, if Home Depot comes down to the bottom Bollinger Band, start looking for divergence, because it is the strongest divergence play you will ever see. And so this divergence play that happened 2 weeks ago on one option call that cost you $400, you would have made $5,700 easily $5,700. If you did 10 option calls on it, which is $4,000, if you just took $4,000, which on most investors who actually trade for a living, $4,000 into one stock on an option call isn't anything. That's just a normal thing. So have I done 10 option calls on Home Depot when I saw divergence, even if I saw it 10 like 8 days late, if I saw it a week late, I saw divergence and I played this option call a week late, I still would have made 50,000, anywhere from $30,000 to $50,000 on that option call. On 10 option calls, $4,000 investment, $30,000 to $50,000, depending on where I got out at. And that was just playing it to the last previous high. And so when I say last previous high, when you look at an option call, like I'm looking at Apple right here, that guy right there, that's your last previous high right here at 143. And so if I saw divergence down here, I'm playing it up to here. And if I get to there, then I won. But I actually don't play it that high up. If I find divergence down here, I play to the last previous high, which is this guy right here, this little guy right here, or this guy right here. The risk is only the 4,000, whatever money that you put into it. So if I did one option call and it cost me $400, then my risk is $400. That's it. Now, I don't have to stay in it until I lose the $400. If I start to see that the trade's going south and is not doing what I anticipated doing, like I do these predictions on the path, and it doesn't hold to that path, and it all of a sudden breaks below it, I get out. and I can just recoup whatever money I have left. Now, if it drops way below what it's valued at when I get into it, and it goes to nothing, it literally costs. It goes to like the price point of it is 1 cent. I can't get out of it. It's worthless at that point. So I waited too long. So that's why I say look for the yeah. It's not a bad risk because here's the thing. Your profit potential is infinite. Infinite. So now, is it going to go for infinity? No, but it can. And so, can I lose 100% of my money that I have in the stock market if I play this option call for $400? Not if I have more than $400. If I'm only risking $400 in this option call and it goes to nothing, I lost $400, but I don't lose everything else I had. You know, if it runs south of that, I don't lose anymore. That's all I've lost. So, but if it runs north forever, I've made an infinite amount of profit and I can cash out at any time. So that's the thing with options is that if you play it the right way, and that's why I made it very simple, and there's a certain way to play it. And if you just play it that way, it's the safest way to play option calls. It's the safest way to play the market, period. And like I said, this guy, Richard, he does 2 option calls a day for 150 bucks in the market, but he does it times 30 contracts on each one, which means they make $6,000. He does his option calls for fun throughout the week. He's making thousands of dollars on that, $10, $15, $20,000 a week on that. And then he also closes the houses that his wife sells, who also plays futures and options with him on her own account, but sells close to 30 houses a month. And he does the closings on those for the financing on them. And so this guy who took a liking to me told me his whole strategy. And he spent 30 plus years flying out to different people around the world to figure out how they traded the market. And then this is what he's boiled it down to. And he's traded under I forget this guy, Larry, Larry, I always forget his name. Larry Futures Trader, daughter is famous actress. Larry Williams. I always get that. I always miss that name. Larry Williams. He learned under trading. Larry Williams. He's friends with him. And Larry Williams is one of the best futures traders out there. And now he actually likes options better. And then he knows John Bollinger personally. He has his number. He's eaten with him a couple times. And so the guy has traded under several people, and his strategy that he got off of was from some guy in Canada who was 70, but he took a hybrid of that guy, and that guy, he does 50 to 100 contracts at a time for 50 cents to 75-cent gain. So 50 to 75 bucks on each one. So he's making 37, what is it? I don't know. He's making some ridiculous amount. A lot more than the other guy. But the other guy, he's doing it for 150 bucks for $6,000 a day. That's 1.3 or 4 mil a year. After taxes, he's making $1 million. Robinhood is the easiest one to trade off of, but you can't do chart analysis on it. So Robinhood would be the best platform to do options on, and that's the one that I actually like the most. Out of all things, I thought it would be the one I liked the least. Thinkorswim has the best of both, I guess. The options are a little bit more confusing to do on there, but you have more charting capability on there. I don't think it's the easiest to use though. Robinhood is the easiest to use. TradingView is free. and you can make an account on there and use their charts and get real-time data. I mean, it's slightly delayed. It's like maybe 5 minutes delayed or something like that. But you're using it for a daily chart, so it doesn't matter. And then when you go for a 15-minute chart to find your trigger to get in, that doesn't matter either. So you're literally looking for the big play, not the little play. So that would be my recommendation: is either go Robinhood and TradingView for your charting, or go Thinkorswim for all the above. And the video I show you